In this video we are going to talk about finance rules school does not teach you. So before starting this video, please like this video and subscribe to this channel for our future updates. Number 1. Buying your first home. You've probably heard the popular saying, if you want to buy a house, you'll need to save up to 20% of the purchase price for a deposit. If you don't, you'll have to pay for private insurance, which will put a dent in your budget. What you won't hear in class is that, while bigger mortgage payments may be inconvenient, the financial trade-off between paying extra money now and saving up for a 20% deposit may be worthwhile. When we look at macroeconomic indicators in the United States over the last decade, we can see that land values have increased, but wage levels have stayed constant. As a result, saving 20% of the house value to begin with is impossible, because it will only climb dramatically over time. The idea is that you should choose it if you can comfortably save the money in less than 5 years. If it takes you longer, however, you'll be chasing a changing target as prices rise. Number 2. Save, save, save. They'll show you how to save at least 10% of your salary in class. But let's face it, this isn't nearly enough to retire on. Unless you're a multi-millionaire. An honest savings rate for many people with a daily wage will be between 25 and 40%. We're not arguing that 10% is completely useless. In fact, it might be a terrific starting point for building your savings muscle, saving a lot more money, and reducing your expenses and unneeded charges. Instead of buying that cup of coffee every morning, put that money into a bank account with a higher interest rate. Number 3. Emergency fund. You may not recall hearing about an emergency fund in school. But you're in luck since you have us to show you around. According to recent figures, up to 40% of Americans do not have enough money to cover a $400 emergency. This is an unsettling figure that demonstrates how many people overlook the need of having an emergency fund. What if you were to lose your job tomorrow? Would you have had enough cash to cover your expenses? The golden rule is to have 6 months' worth of spending stashed up, but we suggest that the higher the better. Number 4. Budgeting basics. Budgeting is a necessary part of life, but you won't learn about it in school. Unfortunately, failing to grasp the foundations of budgeting while in school might put you at a disadvantage right after graduation, especially as you advance. Not knowing how to handle expenditures and distinguish between wants and wishes might lead to one experiencing hardship after hardship. Everyone should be able to plan a life that is supported by earned revenue. This includes knowing how to budget for all bills while yet leaving enough money for needs like groceries and savings. But let's face it, as important as budgeting is, nobody enjoys keeping track of every single penny they spend. Instead, you'll use what we call tactical budgeting. Number 5. Compound interest. The power of interest is maybe the best kept secret in the business. Time is the one advantage that every adolescent has over their peers. They need a whip hand when it comes to investing, even if they won't achieve their financial goals overnight. All they have to do now is try to harness the forces of interest. Young people can acquire significant wealth by putting tiny amounts of money aside in a high-interest account, which will compound over time. Here's a good example of just how crucial interest is. If you were given 2 options, the first being a $3,000 bill and the second being a penny that doubles in value every other day, which would you choose? Isn't it true that the majority of people would choose the first option? You probably certainly did too. However, if you do the math, the second option would be worth $10 million in just 30 days. If that isn't enough to persuade you to begin taking advantage of this wonderful potential to increase your money, we're not sure what would. Number 6. Secrets of credit. Most young people find themselves maxing up their credit cards shortly after receiving them. They then find themselves in a life of debt, where they are compelled to pay large amounts of interest, and in some circumstances, this results in late payments that have a negative impact on them. The importance of credit ratings and keeping a good credit history is something that most people are unaware of. However, they may recall the secrets from school and have paid greater attention to teaching them in this life skill. Here's what you're looking for. Your credit score is one of the most significant aspects of your financial health, and it largely affects your adult financial situation. It's much easier to secure a house, a car, or a commercial loan with a good credit score, and it's also much easier to achieve additional goals in the future. The necessity of credit will not be overlooked. Everyone must be able to create credit and maintain a consistent score. Here are a few pointers on how to accomplish this. To begin, obtain a credit card. Most people believe that acquiring a credit card is a mistake, but it is critical for improving your credit score. Number 7. Rules of insurance. If there is someone who is financially reliant on you, you should strongly consider purchasing life insurance. It could be a child, a spouse, or a parent. It is preferable to recommend a term policy over a life policy, because you will have coverage whenever the need arises. However, if no one financially relies on you, you should cancel the coverage to save a lot of money. Get insurance for other characteristics and assets you hold in addition to life insurance. This includes your vehicle, home, valuables, and health. You can also acquire umbrella insurance, which covers many policies and provides a discount if purchased from a single insurer. Before deciding on a company to insure with, take some time to compare different rates and hence features. Number 8. Taxes. Taxes are such a vast subject that they are rarely mentioned in class. If you want to stay on the right side of the law, you need to understand how they work. Find out how to compute the rate and discover what percentage of your money you'll be left with before you get your first salary or make any sales from your firm. This may help you determine whether an employment offer will fulfill your financial demands and what pricing approach is appropriate for your products or services. Fortunately, there are a plethora of online calculators that will take care of the grunt work for you. They'll show you your gross pay, the amount of tax you owe, and the amount of money left in your account, generally known as the wage. Number 9. Guard your health. Without insurance, a hospital visit for an injury like a cracked knee might cost thousands of dollars. If you're having trouble paying your monthly health insurance premiums, what will happen if you end yourself in the emergency room? You'll have to borrow money to pay your medical bills, which will put a strain on those who had other plans for their money. Doesn't seem fair, does it? Get a medical insurance policy as soon as possible if you don't already have one. Taking care of your health might also help you save a lot of money. This includes eating the right foods, maintaining a healthy weight, exercising regularly, and refraining from excessively ingesting alcohol and other addictive substances. You don't want to be sorry later, so take care of your health now. Number 10. College debt isn't 100% necessary. Despite popular belief that student loans and a university degree go hand in hand, you do not need one to obtain the latter. 85% of recent graduates lament their high school loans and, as a result, the large sums of money that go toward paying them off as soon as they start working. It is not always necessary to obtain these loans in order to pursue your degree. Some colleges, such as Davidson College in Charlotte, provide assistance to students so that they do not end up in debt. Other institutions provide a good education for a fraction of the cost of a private school. You can also go to school part-time, work while you study, enroll in a less expensive institution, graduate quickly, or start your adventure at a junior college. But we're not suggesting that debt-free education should be the goal for everyone. It might be worthwhile in some instances. If you want to start a high-paying job route, a few $1,000s shouldn't get in the way. However, do not consider this debt to be the most important aspect of being a university student. There are a variety of different options for accomplishing your job objectives. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.